The bounce we saw in Bitcoin, if you looked at it and compared it to the stock market, has been really, really weak, right? So you can see this kind of angle of this bounce. And then we obviously are already retesting this area here, which is around 19,500 to 600. Now, the reason that's a significant level is that happens to be the 2017 high. So that's a big point, right? That is a big, big level. And again, if you compare it to the stock market, if you look at the NASDAQ, for instance, the NASDAQ had a much more sharp incline. So to me, that tells me there's relative weakness in Bitcoin. And while I still think there's always going to be bounces along the way on Bitcoin, it does concern me that we didn't see a bigger bounce in Bitcoin off of this level to start with. And it does tell me that whenever we see a big sell-off in the overall asset market, Bitcoin probably is still headed down to 12 to 13,000, maybe even lower.
Gareth Soloway is the president, CFO, and chief market strategist of InTheMoneyStocks.com, a stock trading platform that offers subscribers verified investing alerts. Soloway is also a brilliant technical analyst and an avid participant in the cryptocurrency industry. However, he has become slightly infamous with Bitcoin investors for predicting that the largest cryptocurrency is headed for at least $13,000 before the end of the bear market. In a recent interview with Thinking Crypto, Soloway explains that his doomsday prediction for the world's largest cryptocurrency, and by extension, the rest of the crypto market, has not changed. Instead, the technical analyst warns investors to watch out for max pain due to the various factors currently impeding any serious moves upside. He points out that during last month's bear rally, Bitcoin showed significant weakness compared to the S&P. As a result, Soloway does not see any serious move to the upside before the mega price decline, which he believes will make Bitcoin lose over 80% of its all-time high price. Soloway also talks about Ether, the stock market, and real estate, and how the Fed's next interest rate hikes will affect each of these assets. Please watch, like, and share this video as Gareth Soloway shares this important market update. We love to hear from our viewers and subscribers, so ensure you drop your comments and observations in the comments section below and subscribe for more videos. Thanks and enjoy the video.
Basically, right now, the dollar is in control. If the dollar has a small pullback, crypto, stocks, they'll all bounce. But again, you have to just wonder, what's the Fed going to do in September when it comes to their rate decision? You have gun-shy investors that are very wary of crypto right now because of Terra Luna, because of Celsius. Again, you don't get FDIC insurance on your crypto account. So then if someone steals your funds, they're gone. I mean, there's so many different things that are negative. And I think one of the biggest ones is there's this regulation that's looming out there, right? We know the judge is kind of deciding about the Ripple case. Gary Gensler is saying, hey, everything but Bitcoin basically is a security. And what the heck does that mean? Like, no one knows really what the rules are going to be if it's not a commodity like Bitcoin. Instead, it's a security. And so I think it's creating this kind of period where no one wants to commit big capital. I mean, sure, if someone buys a little bit here, whatever there, but you're not seeing big money go into crypto right now. And without that, it's very hard to get big bounces.
What do you think they do next month? Do we get another 50 basis points or 75 basis points hike?
Yeah, so I'm in the camp of 50 basis points in September. I think the rest of the year, you'll probably only see 25. I do think that the Fed is talking a tough game because they have to, right? If they all of a sudden started talking a dovish game, what would happen? Asset prices would surge and then inflation would start going up, because when asset prices go up, everyone feels richer, so they're willing to spend more money, right? So he's got to talk a tough game, but the bottom line is that they will back off when the economy gets weaker, and it's already starting. We just haven't seen the jobs numbers get weak yet, and I think Friday's jobs number is going to be really important to the overall market, based on what is it going to tell us will the likely outcome of the Fed next decision be. So I think the Fed talks a tough game, but they know deep down that whenever we get into a recession, if it gets bad and inflation is still, let's say, 4 or 5%, they can't print us out like they have done the last many recessions. And that's scary. Like, the market at some point has to come to that realization that the Fed is not going to swoop in and save the day. And I think that's a big issue that we haven't even touched on yet in the markets.
The technical analyst has raised some important points that will determine the next phase for the crypto market. Prices are probably going to keep chopping sideways until we get the jobs reports and the Fed's next hike. According to Dow Jones, economists expect that more than 300,000 jobs were added in August, with the unemployment rate still at a 50-year low. Though it is considerably lower than the 528,000 jobs added in July, it could still signal more jumbo-sized interest rate hikes from the Federal Reserve. Like Gareth Soloway, do you think the Fed will announce another 50 basis points hike during the next FOMC meeting? Let us know what you think in the comments section below. In his interview, Soloway also talks about Ether, the second largest cryptocurrency by market cap, which has had a more significant bear market rally than Bitcoin. Soloway also gives his post-merge prediction for Ether and explains the factors that will turn him bullish.
Yeah, so I think part of the reason Ethereum has outperformed percentage-wise. So if we go to the Ethereum chart, right? If you looked at where we bottomed out, it was around 800 and change. We went as high as 2,000. So Ethereum rallied over 100% from the low to the recent high. Now, if you compare that to Bitcoin, and Bitcoin didn't even get close to that. So I do attribute some of the Ethereum rally to be the excitement around the merge. Now, the question is, after the merge, what ends up happening here? Do we still see more upside? Does it kind of translate into just a stronger Ethereum price or not? My guess is short-term, no. But I do think what the merge is going to do to Ethereum being slightly deflationary and having other aspects to it, I do think it potentially puts Ethereum in position to rival the market cap of Bitcoin down the line. But again, when I say down the line, we're talking years out. Short term, fear and greed always rule. And I think fear will take over. When Bitcoin goes to 12, 13,000, my guess is Ethereum's headed much, much lower as well. Down the line, Ethereum starts to rebound and maybe even rivals that market cap of Bitcoin. If we do get a big bounce, the 200 moving average on Ethereum is around 2150. So I'd be hard pressed to think we'll get above that. So I think that's your best case scenario. I'm nervous that we don't even get there and that maybe we get a bounce into the merge and then a sell the news event afterwards. So it's tough to know. I mean, bottom line is I think as an investor I love Ethereum, I like Bitcoin as well. For me, it's when we get down towards these lows, when we break lows, if Bitcoin starts going to like 15, 12,000, I'm just going to basically start dollar cost averaging with small positions. And basically the thought process there is that I truly believe in Ethereum and Bitcoin. The other ones, it's kind of the rulings out on those at this point. But those you just kind of slowly inch in, understanding they could still go a lot lower, but knowing or at least having the probability that in a year, 5 years, 10 years, they'll be much, much higher.
Gareth, when do you think you're going to flip bullish?
For me, it will start kind of around 12 to 13,000. But in all fairness, I'm being very realistic in saying that we could go much, much lower than that. But at that point, I think the downside is limited, right? So, I mean, what's at 12 to 13,000, there's only 12 to 13,000 left it could go, right? So, versus if you're in at 69,000 and we're now at 20, I mean, that's a long distance of drop. So for me, it's a couple things. It's price point. So how much risk to the downside is there in a worst case scenario? And then also it's a matter of looking at what's going on in the crypto sphere, looking at regulation. So I'm a big believer that the regulation, whether it's good or bad, the market just wants to know. Investors want to know the rules. Without knowing the rules, there's no big money that's willing to go in. So you have to get this regulation out there. That's going to be a kicker for me. That'll be where I start to say, okay, now we know what the deal is here. Now we can at least value these things appropriately. And then, like I said, you want to see that fear and panic get to so pervasive levels like it did in 2018, where people were saying, oh, I don't think Bitcoin's gonna survive. We haven't seen that in crypto yet. Yes, Terra Luna blew up. You've had some other blowups, but you're not seeing it to the extent where a true bottom is in yet. So we need to see that absolute fear and panic, the washout of all the weak hands. And then that's where, again, I go contrarian. I say, okay, this is really max pain. Now I start, looking on the bullish side.
Soloway also talks at length about the real estate industry. According to real estate brokerage Redfin, mortgage purchase applications and pending sales both saw large declines in August compared to a year ago. This is largely due to the spike in mortgage rates, which rose to 5.66%. Home sellers are also reluctant to enter the market, which has also caused a decline in new listings and the total inventory of homes for sale. Here's what Gareth Soloway has to say about the real estate industry.
So I heard Redfin today was saying that they're seeing as many cancellations of houses under contract as they saw in March of 2020 when it looked like the world was ending because of COVID and the panic that came with that. So that to me is a great signal. If it makes a lot of sense, right? Because interest rates have surged. You're now 5-6% on a 30-year. That's a huge difference from where we were a year ago. And also prices have gone up huge in the last year. So it's like a double whammy for buyers. And buyers are getting a little, everyone's hearing recession. That word recession is being thrown around. And so buyers are like, I'm not paying full asking, let alone what they were. Like 6 months ago, it was 100,000 over asking. So it makes a lot of sense. Prices have to come down. I think the Fed wants it to come down. They want to make housing more affordable. And by doing so, they'll also bring down inflation as well. So I think you're going to continue to see weakness in housing, especially if we slip into a recession.
What do you think about the latest update from Gareth Soloway? Let us know what you think in the comments section below. Also, ensure you drop your comments and observations about the current market conditions and smash the like button. Thanks for watching.